Most beginners think that when the stock price is green, that's good, and when the stock price is red, that's bad. But that's wrong. And if you don't know why, you could be making a mistake before you even start investing. Let me tell you the truth about share prices. Now, I'll be using stock price and share price interchangeably. Now, a share is the cost of one stock or ETF. And a stock means that you're a partial owner in a company. An ETF stands for exchange traded funds, and that means you're buying pieces of companies in one bundle. When you see a stock price is green, that means that there's more buyers than sellers. The company could have had good news. They could have released a new product. Also, they could have had strong earnings. Now, earnings are released every 3 months. Additionally, there could have been optimism in the market, and that would have made the price go up. But just because it went up, it doesn't mean it's gonna keep going up. When the stock is red, that's because there's more sellers than buyers. That could be because of bad news. There could be some sort of lawsuit. The company could have had weaker than expected earnings. Also, the market could be having a down day, and that could be temporary. Most beginners miss the fact that the stock price only tells you what the market believes the price is that day. It doesn't tell you the company's value. Let's take a look at two companies.
So let's take a look at Google. Now, I went to Google Finance, and in the search bar, I typed in Google, and the ticker symbol is GOOGL. Now, if you take a look at the price that day, well, this is Friday. So if you take a look, the price that it closed at is $235.05. Now, Google at 9:30 was $232.79. And throughout the day, it went up. So at 9:47, it was $234.77. Then it went down to the lowest that it was that day, $232.20, and it went back up. So this means that throughout the day, there were buyers and sellers. So that's what makes the price red or green. You had more buyers in Google than you had sellers that day. So at the close at, let's see, 4 o'clock, the price was $235.05. That's why it ended the day green. So if you had $100 and it went up 1.18%, you now have $100, $101.18. And if you look over here, it'll say days range right over here. And the lowest for Google was $231.90. And the highest was actually $235.76. So it started low, it opened low, and it ended high. So that's why it's green for the day. Now let's take a look at the other side. Let's look at Amazon. And in the search bar, you could type in Amazon or you could put the ticker. Now the ticker symbol is AMZN, and that just means it's an abbreviation. A lot of stocks have either 3 symbol abbreviations, ticker symbols, or 4-letter ticker symbols. But you could also just type in the name in some of the search bars, and it'll just give you the ticker. So Amazon, same day, it ended red. So you see it's down 1.42%. So that means if you had $100, now your $100 is $98.58. So let's see. Amazon opened at 9:30 and the price was $235.05. Then it shot up. It shot up. It went up a little, $235.38. So you see throughout the day, there's buyers and sellers. And down before noon, it was, let's see, it went down to 232 and 4 cents. So you see throughout the day, it just kept moving. So since it's red, that means there were more sellers for this company than buyers. So your share of Amazon would have went down that day. And that just means it went down. It does not mean that Amazon is a bad stock, a bad company. It could have had bad news that day. It could have had earnings. It could have, the market could have been rough that day, and it drove the stock down. So if you look over here, the day's range, the lowest it was $231.93, and the high for the day is $236. So just keep that in mind. It's not about red or green, because there's buyers and sellers all day just moving the share price up and down. But it's about what happened in the market that day. And you could find that with news. You could just look up. You could just look and see how the market moved that day, and you could gauge it. But don't think that the company is bad or good because it's red or green. It's just the market movements, where it opened, where it ended, and there's a lot of different variables. If you're new to investing, I have a fresh start mini guide, and that'll give you some essential terms and insights to get you started in the market. You could look for that. The link is below. So let's get back.
Here's what I wish someone would have told me when I started investing. The stock market moves up and down all day. Don't watch it all day. Also, don't panic. This is a long-term game. When you see red, don't get ready to sell. If you're just starting out investing and you want something simple, I made a free guide called the Investing Basics Made Clear for Women. It goes over basic terms and mindset so you don't get overwhelmed. Grab it, the link is below. So comment and let me know, do you still think green means good and red means bad? Also, check out my video regarding the stock market. In my next video, I'll talk about the stock market and the S&P 500. What's the difference? So leave me that comment and subscribe for new videos. Oh, don't forget to share. And I'll talk to you later. Bye.